Hello everybody. Welcome back for another video. Hope you're all doing fantastic and that you're all having a wonderful day. And without any further ado, let's jump right into it. Speaking at an interview with decentralized finance and NFT platform Defiant, Ethereum co-founder Vitalik Buterin has revealed his plans to change the outlook of a lot of different things. A lot of things on Ethereum, including Ethereum staking. Notably, Buterin was asked a couple of questions, including whether the future roadmap, or what the future roadmap for Ethereum is going to be. In response, the ETH co-founder emphasized the need for a revamp. Over the course of the last 2 years, roughly 2 years, for some reason, I know the reason. Rather, the beginning part is that a lot of different cryptocurrency projects and analysts have been not talking negatively about Ethereum, but they keep saying, well, I hoped there would be so much more. Is that it? Oh, you finally have this, but where's the other thing? Kind of alluding to the fact that Ethereum should be doing more. And B, the reason why, I know why they're doing it, it's basically because their projects aren't doing as well. Recently, there were a number of high-profile people within the cryptocurrency space who created projects that they told people years ago would be the new Ethereum and are now barely being used, who came out in, I don't know, what's the word to throw there? They basically kind of made fun of Vitalik Buterin for talking about that he needs to change and or wants to change Ethereum more than it currently is. And these articles are basically going around with people being like, well, of course he has to change it. Ethereum's not that good. And it's like, sir, no one's using your chain. No one's using your coin. You have no partnerships. You most certainly are not partnered up with Microsoft and JP Morgan Chase and 500 other companies. So I understand that a lot of it has to do with jealousy. I understand that a lot of it also has to do with if Vitalik comes out in public and says that something has to change or he wants to change something about the protocol and or make it better, alluding to the fact that it is not as good as it could be now. Of course, the Terra projects that no one's using, their leaders are going to come out and be like, well, of course he said that. Of course they have to make it better. They're just trying to be like us. And I'm going to tell you who one of the people is in a very short bit, because I was also quite taken aback by the entirety of the situation. Buterin noted that one of the things that the firm discovered in 2023 is the need to develop a positive approach towards staking centralization. A lot of people have come out recently talking about how centralized staking is, but it's usually, once again, other projects that aren't being used and or the original creators of these coins have such an egregious amount of tokens that when it comes to actually staking, they're staking around 7 to 15% of all the coins that are out there. So of course, mathematically, they're going to have a lot more coins staked percentage-wise than Ethereum actually would. Ethereum staking also isn't that great. It's not as amazing as it could be. But one thing that I've always learned is that as these are computers, and don't argue with me, at some point they're going to be upgraded. The main factor always is for these coins, for these projects, is who's using them. The 500 companies and corporations who are building on top of Ethereum, they know it's slow. They know it's 15 transactions per second. They know that Polygon is picking up 90% of the slack. They get it. But there's a reason why they're using this one chain and none of the other chains. So whenever people talk about things are centralized and things are so-and-so, yeah, also your coin's hyper-centralized in general because the creators are holding a huge portion of it. The people who are staking are mainly the creators and their 15 other friends who also got in on the ICO at some point early. And or, okay, cool, we know that. So what other bad things do you have to say about the project besides centralization, which every single coin at some point has had to go through? With this in mind, Ethereum is moving forward with the redesign of a staking overhaul. In the process, some changes will be made to staking pools as well as mining pools. What ends up happening a lot of times, and this used to happen as well, more so for Bitcoin, is that you kind of have, if you realize you can't do it on your own or you don't have the 32 Ether, you find a staking pool or a mining pool, and you basically give them your coins, they pool it all together with everyone else's, and they make sure that you kind of get your coins from it. The issue is that usually these entities become so big because the vast majority of people tend to use bank accounts. They want to put their money somewhere and not have to think about it. So if you only have 8 companies who are like, hey, we offer this gigantic service that you don't have to do anything, just give us your coins, of course, these 8 entities are going to become the largest out there. It's also a really weird idea to do the 32 Ether staking thing. I'm not sure exactly what the number is. I assume it has something to do within the code of you need 32 minimum to be able to actually start structuring the network to become more stable. I'm not really sure. Previously, Buterin talked about adding more features to the Ethereum staking protocol as well. The crypto leader is positive about the move for decentralization. Availability for contacts, changes. He went on to talk about the next Ethereum upgrade, which will be EIP 4844, which they're calling dank sharding. I'm reading a book currently about a lot of the leaders, if you will, use that term, within the cryptocurrency space. And I knew that Vitalik Buterin was like an interesting guy, but I didn't realize that he how do I say this? Like he kind of just wants to have fun and just makes things more decentralized. So a lot of the times, a lot of the words for things that are used within Ethereum, I can't stand the sound of them, like dank sharding. But these protocols are made by a few number of people who actually don't really care about the larger majority of the market, and they just want to kind of make something that ends up working. I'll tell you guys all the books once I'm done reading them, but I'm reading multiple books right now on the cryptocurrency space. According to Buterin, the data map space for this upgrade will be improvised to 16 megabytes per slot. Once that has been achieved, the protocol will only be left with the responsibility of setting parameters and attributes. Ethereum apparently also plans to scrap the use of hard forks in the future, but this would be after they have successfully come up with a voting system that favors the proposal. And apparently they're going to be rolling out something called Dencun, DENCUN, sometime in early 2024. So like I said, there's a lot of stuff that's going to be happening. And I assume, once again, the timing has to do with the bull run, as far as like everyone wants to release good news when the prices look like they're going to be going up. So that prices then end up going a lot higher based off of all of that news. And the idea of hard forks, basically, I mean, it's not really that much of a thing anymore. I think a portion of the cryptocurrency space has actually matured enough that we don't have this problem anymore. Hard forks are a fairly normal thing. They're not anything to be scared of. They're not any like type of like, oh, we have a problem with the hard fork. The issue is that if an upgrade is too large for the network, instead of doing a soft fork, they kind of make sure that like that the network can handle it in a sort of way, and they kind of not branch away from the old chain, but they make sure that there's like enough space for everyone to move. It's whatever. The problem is that years ago, whenever we had a hard fork, another company would come out and say, whoa, we are the actual Ethereumers, and we're going to make sure that the old chain lives on because it's the real chain. And then that ends up becoming another coin. It only confuses people in the market who believe that this other chain is the real Ethereum, or this is the real Bitcoin, or of course Bitcoin Cash Satoshi's vision is the real one because it was a fork of a fork of a fork. And that becomes a real problem. So hard forks don't have that connotation as much anymore, and a lot of the cash grabs have kind of faded away. But they're trying to also stop completely doing hard forks in the future. I'm not sure exactly how that's going to work, especially if an upgrade is too large. But we all know, for those of you who are wondering how you know what the real chain is, it's basically the one with like the history behind it. So you can fork Ethereum 9,000 times and say that they're all Ethereum. But if we look on the actual block explorer, we go, oh, wait. Nope, that one has transactions for the last like 11 years. This is clearly the Ethereum I was using back in 2015, 16, and 17. So cool. Oh, and for those of you who are wondering, the guy who was making, I mean, you should know this by this point. The guy who was making fun of Vitalik Buterin for saying that Ethereum needs to be upgraded and can be a lot better was Hoskinson. Yeah, I've been reading a lot, like I said, about the cryptocurrency history and how things got started. And light spoiler alert from what I've been reading and have found out from multiple books and sources is that apparently Charles Hoskinson was not actually liked that much and therefore kind of went on his own. And everything that he did afterwards was basically kind of to put down and or make fun of the people who basically told him to leave Ethereum. So, yeah, it's really history is something. That's the more updates on Ethereum news. We'll see what happens. Once again, the future will happen. We have no choice but to be a part of it, and we will hear at some point in the future exactly what they plan on doing, because that's just the way that the cryptocurrency space works. And yeah, let's move on. In very big news, in a recent development, Fidelity has now announced their intention to launch a Fidelity Ethereum fund. This is not to be confused with BlackRock announcing about a week or two ago that they're also trying to launch an Ethereum ETF. There was also, I believe, Grayscale is also in talks with the US SEC to launch an Ethereum ETF. And there was another company, was it Bitwise or BitShares? I don't remember, Bit something, who announced their intention of launching an Ethereum ETF as well. So now Fidelity has jumped onto the train to be just like everyone else because everyone believes for some reason, or rather, I'll put it to you this way. As Bitcoin and Ether are declaredly the only two coins by the SEC that they do not see as securities, a lot of people believe that therefore Ethereum would have an easier time getting an ETF even more so than Bitcoin. By filing for an Ethereum ETF, Fidelity aims to provide investors with an avenue to gain exposure to the performance of ETH without directly holding the cryptocurrency, which is the stupidest thing in the entire world. If you're trying to make sure that you make money from an asset, if you want to open up your wallet and see that you made 100K, it literally does not matter if you are selling a fund or if you are selling the coin. You trying to have indirect exposure is only causing you more problems in the future because what you're denominating is in US dollars. That continues to inflate every single year while we see the prices of many of these coins doubling over the course of a year. Likewise, this move aligns with, and also adding onto that fact as well, is basically that these companies are doing it because they want the money. You're going to hear, and you probably have heard throughout your life, there are always going to be companies who are like, yeah, we're doing this because we want to have a nice, safe, easy, regulated space for our customers. It's like, no, you're doing it because you want the fees. You want the money from people using your products. You're not trying to help people. You want to make money. Just be real about it. Likewise, this move aligns with the broader trend in the financial industry, where traditional institutions are increasingly exploring opportunities, yada, yada, yada. With Fidelity's application, it joins the likes of ARK Invest, 21 Shares, Hashdex, and BlackRock, among others who are in the queue to secure approval for a spot Ethereum ETF. And then the article continues going on. You don't really have to, it's not that much more important. This was, of course, very popular news. The idea being, once again, as we spoke about earlier this year, Fidelity and BlackRock are gigantimous. Like, they're actually completely gigantic. And a lot of people believe that BlackRock is basically going to get everything that they want. If they get everything that they want, everyone basically has to stand in line behind them with the same pieces of paper and say, hey, you can't say no to us because you said yes to them and we have the exact same thing. We're working with the exact same company, the exact same metrics. So it's basically if BlackRock gets it, we all gets it kind of thing. That's the Fidelity has filed a 19B-4 with the US SEC to list a spot Ethereum exchange traded fund. And yeah, let's move on. Also in the SEC did it news, Celsius, a cryptocurrency lending platform, has revealed their intention to transform into a brand new entity with an exclusive emphasis on Bitcoin mining. Basically, Celsius, like many other companies within the cryptocurrency space, are not liked by the SEC and therefore have to change exactly what they've been doing. The idea of lending cryptocurrencies years ago was huge. You don't understand it. It didn't have letters, like there was no ICO, NFT, all these other things associated with it. But crypto lending, the idea of what it would mean in the future was monstrous. The idea that you would never have to go to the bank again and you had to, or you were simply just relying on a smart contract that would automatically pay you back and all these other things, and you were dealing in crypto. And there were no banks, no institutions, and all these other people who were not simply a part of that sphere, was huge. However, as you might have imagined, a large part of the problem has to do with the fact that the SEC wants to control everything. So the SEC over the last couple of years has been taking down companies like this. Of course, many of them have been fraudulent, but a lot of them were actually working as they said that they would be. And the idea of the SEC being once again circumvented and not being used and not being applied for and not being blah, 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 and all these other things and circulating around the bank and not, here's the best part, and not using the US dollar as a means of transfer was a gigantic no-no. Because if you find a way to lend someone Bitcoin, they use it for whatever they need, and then they pay you back in Bitcoin, the US dollar was never touched. And the part of the problem is that the way that the US dollar has remained so popular is that at some point, nearly everyone in every country has to touch the US dollar in some sort of way. So Celsius has announced, much similar, not like, but similar to what Tether said a couple of days ago, and Celsius is going to be almost exclusively transforming their cryptocurrency lending platform into a mining company. This seems to be the new thing for companies to remain in the cryptocurrency space, to be able to trade crypto, to be able to not be illegal, but also to continuously make money from it as well. We were also going over, for those of you who missed it, a lot of people believe that 2021 might have actually been the last cycle, in that whenever we go up high in Bitcoin's price and everyone's like, wee, and the prices go all the way really high, and then at some point we actually end up going back down. A lot of people believe, because of the institutions getting into the space, that any downward fall might be short-lived, in that market goes up 2024, goes even higher 2025, and everyone is like, oh, okay, here we go, it's going to fall down. And prices fall by 6%, and then we see the market going back up again because the institutions, the 15 companies who have Bitcoin ETFs, who are accumulating in other ways, normal people, institutions, other countries around the world, they see that dip and they go, now's my time to buy, and then the price just kind of continuously goes up. So the idea of mining instead is kind of like, okay, cool. This is an industry that we can get into that's going to be around for at least the next 100 and something or odd years. Therefore, let's shuffle into this, because the SEC also seems to not have a problem with it. Celsius is now registering new shares for a new publicly traded Bitcoin mining company called, that's a dumb name, called Mining New Co. That is very on the nose. It's literally Mining New Company. Okay. Which will be owned by its own customers. I'm not sure if they're releasing a coin. It doesn't say anything about it. I'm not sure if the customers means like if you have over a certain amount of money, you get a stake in the thing. It doesn't necessarily say, but yeah, essentially another one bites the dust. The US SEC is making a clear path for BlackRock to strut itself down, because they're destroying every other company in the way that could potentially get in the way of BlackRock dominating in any sort of way. That's the Celsius is no longer lending crypto. They're going to be mining exclusive. Yeah. Let's move on. You all know what's coming because they're always in the news. Cryptocurrency exchange Kraken has come under the radar of the, you guessed it, the US SEC yet again, because these people have nothing better to do with their time. Can you imagine? You have 7 people in an office and you're only focusing on one market. I can't begin to imagine the other things that are going on in the rest of the USA that could be actually regulated by the SEC, but they're continuing to just focus on the crypto market. This time around, the crypto firm is being accused of illegally operating as a security exchange, as the SEC has claimed that they have failed to register with the appropriate authority. I will always find it nearly impossible to believe that Kraken, Coinbase, Binance, and Gemini willingly tried not to register with the US SEC. All 4 of those companies now have proper lawsuits against them by the SEC. If we, me and you, have known for a while that basically you gotta register with the SEC, I feel like if we knew it, these companies that have 20 lawyers probably also knew it as well. There is no chance under the sun that Kraken, Gemini, Coinbase, Binance, and any other exchange within the United States made sure that they were not registered with the appropriate authority. It just doesn't make any sense. Notably, the lawsuit this time is also directed at Kraken's parent firms, Payward and Payward Ventures as well. The US SEC is completely out of control, and I honestly don't understand how we even got to this point. The SEC wasn't even there's a universe, there's a timeline out there where we don't even talk about the SEC, where they're simply not a thing. They're so omnipresent in the news all the time. They literally are basically in every single article. They're always everywhere because these people have completely lost their minds. So yes, the US SEC is once again this year cracking down on Kraken, saying that they're operating as an illegal securities exchange. Noteworthy, the new charge against Kraken is one of the SEC's strategies to establish its position in crypto operations within the United States. Much more, Gary Gensler is doing all things possible to just destroy the entire market. It's the weirdest thing in the entire world. The charge is a matter of securities law violations, according to the SEC filing. Precisely, the SEC wrote in a court filing in the U.S. District Court for the Northern District of California that without registering with the SEC in any capacity, Kraken has simultaneously acted as a broker, dealer, exchange, and clearing agency with respect to those crypto asset securities. In doing so, Kraken has created risk for investors and taken in billions of dollars in fees and trading revenues from investors without adhering to or even recognizing the requirements of the U.S. securities laws that are designed to protect investors. Oh my gosh, that's like, do you know what irony is? It's everything I just read. Gary Gensler has never given cryptocurrency regulation. You want me to sit here and believe that Kraken, over the last 7-8 years, did not once try and contact the SEC? Not once. No phone call, no email, nothing. For those of you who were wondering, here's the actual list of coins that the US SEC is saying that Kraken should not have listed on their platform. They are Cardano, Solana, The Sandbox, Near Protocol, Polygon Matic, Avalanche, Algorand, Cosmos, Chiliz, 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 Koti, The Sandbox, Decentraland, Dash, Filecoin, Flow, Internet Computer, and the OMG Network. And then this article, I mean, just stop writing if you're going to be this weird. The article also goes on to say that they were shocked that the XRP was not on the list. It's because of the lawsuit. Like, have you not been in crypto this entire time? Like, I hate stupidity so much. Like, it drives me absolutely insane. Yes. So here we are yet again. I assume there's going to be some major fine because there always is. There's always something from the US SEC. These people are complete psychopaths at this point. At least the only one who at least seems like a decent human being who has a soul is woman. What's her name? Face, glasses. Hester Pierce. See, I got there. Like, I said woman in glasses and I got there. Hester Pierce seems to be the only one with like a mind about her. She said many times, she was like, we need crypto regulation. Like, we should give it to them. And Gary Gensler refuses. So I try not to think of karma in these situations because I can't imagine the universe actually making sure that Gary Gensler does anything right, but that's just the world that we currently live in. So yeah, the SEC has a new claim against Kraken saying that they've listed unregistered securities, and therefore, because they are doing everything themselves, they should be in trouble because how dare you offer something and also be a clearinghouse and also try to help your customers as well and have good customer service. I don't know if they do. I'm just assuming. Anyway, that's once again the SEC news. Yeah. Let's move on. Also in the news, the percentage of Bitcoin circulating supply that was last active on chain at least a year ago has reached a record high of 70%. 70% of all the Bitcoin that's circulating is not moving, surpassing the previous peak in July at 69.35%, according to data from Glassnode. Glassnode being the company who basically gives us all the data. The new lifeline, nope, wrong. The new lifetime high, got it, reflects a strong belief from Bitcoin's holder base in the wake of crypto-wide contagion and macro headwinds after its all-time highs in 2021. No, nobody wants to be the pizza guy. It's super simple. Nobody wants to be the person who sells off their cryptocurrencies when there's a potential for them to go a lot higher. We are on the cusp of the mega bull run. Bitcoin has already doubled over the course of this year. Nobody wants to be the person who sells off their crypto, see the prices going insane next summer, and then they're like, oh, I got to buy back, and I can only buy back less than I bought before. Doesn't make a lot of sense. The percentage of supply that has not moved on chain in 2, 3, and 5 years is also at their respective lifetime highs. It shows long-term investors are in no mood to sell even after Bitcoin has more than doubled in price this year. It's just complete logic. We are in always hyper accumulation mode. And also that 70%, for those of you who are curious, is not, I mean, they're different numbers, is not the same number as the 93% that we heard of whales holding Bitcoin. It was 83% was the other number of 83 who hold, I think, more than, was it 100 Bitcoin? I forgot exactly. Was it 1 Bitcoin? I don't remember exactly what the number is, but the supply continues to not move. It is estimated that, it was from Glassnode and Santiment, I think that there's roughly only, I think, 1.2 million Bitcoin that's actually moving around now. That is to say, these are people who are day trading, or these are people who are buying and selling their coins in some capacity and are accumulating it. So there's like the different time metrics. It's usually 1 year, half a year, or less than, I think, 100 days. I think that's what the other metric was. And the short-term holders are less than 100 days. Long-term tends to be, I think, longer than half a year. And everyone else after that is pretty much like they're not selling their coins. And the amount of people who are holding it for longer periods of time continues to increase. The short-term holders appear to be a lot of people who are new to the market, who are getting in, throwing their money into it. Bitcoin falls by 4%. They get scared. They sell their coins. So those coins are constantly just circulating against like smaller fish who are like thinking of getting into the market, get into the market, they leave the market, and then that coin then becomes reavailable basically for BlackRock to reaccumulate all over again. Yeah, not going to spend too much time on it. We always talk about movements in Bitcoin and how much is being accumulated and also not moving. And that number continues to rise because that's just where we currently are and things are getting real. And I'm glad that some of you have managed to pay attention over the course of the last couple of years. That's the Bitcoin circulating supply news. And yeah, let's move on. Also in very popular news, DeFi Technologies, it says at the forefront of crypto innovation, has disclosed that their subsidiary known as Valours, V-A-L-O-U-R-S, it's not Valors, so definitely probably Valours, is trying to now launch an XRP ETP. That's an exchange traded product. They're basically the same as an ETF, except one is a fund and one is a product, on a European market next month. It says the move not only denotes a substantial diversification of product offerings, but also strategically addresses the surging appetite for crypto within Europe. The impending XRP ETP is poised to provide investors with a straightforward and secure avenue to access XRP. Nope, that's also once again, is nonsense. You can buy it on any number of crypto exchanges right now. I know if you're in New York, I know. I heard someone say it. I got it. I know. Blah, 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 blah. I've been going over the news for a while. I know New York has a very hard time getting XRP. I think the same with Alaska as well. But you understand, if you want to get XRP, you can go to an exchange and you can get XRP. You don't need it to be bought up by a company, turned into a fund, and then that fund sold on a stock exchange. It's nonsense. What's happening is that these people have convinced the majority of the public that an ETF or an ETP is somehow necessary for money to flow into the market. It's just another way for these large companies to control even more of something that they should not be controlling. Yeah, so I don't even know where this thing is going to be listing. This was also very popular news. A lot of the times, a lot of the websites I kept on seeing kept on saying that the XRP ETP is going to be listed in Europe. You know, Europe is not a city, right? Europe is a continent. There are multiple countries who have multiple different stock exchanges. We've heard before from Germany. Don't they have like 2 or 3 different stock exchanges? So no idea where this is being listed. This was very popular. The most important thing is that this actually gets launched and that it actually gets used and that it's like used. So there's a huge difference between one of these things launching and there's like $50 worth of interest or $15,000 or $500,000. You kind of need like $35 million worth of weekly interest to even kind of make it interesting. I assume as this ends up launching, we will definitely hear about it. And then the other thing is that we will always hear is if it did well or if it kind of flopped. Because there have been other companies before, like the New York Stock Exchange and Bakkt, who tried launching crypto products before and nobody wanted them. So we'll see whatever country this ends up, is on the European market. Where exact? Anyway, cool. Fantastic. I hope it works out for them. I don't really know what to kind of say here. I just, it's another ETP, ETF kind of thing that's going to be launching. Everyone's trying to do it at the exact same time. We had a couple launching over the last couple of months in other countries as well. We'll see if they, do well and get any money. I do sincerely hope that you have all enjoyed. I do hope that you all are having a great day, morning, afternoon, evening, wherever you are, wherever the heck you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and or supporting. And I will most certainly be talking to you all soon. See you.